Hello, YouTube. It was quite the day for the bulls, where we now have a decisive bull break if we can continue to go higher because we broke through our daily downtrend. Yesterday's video said whether or not this was a trap, and the reason I say that is because this looks very similar to what happened the last time too. We get two daily closes back above with gaps in the chart, and then it's done. So we have a key catalyst coming up tomorrow, or the ADP Non-Farm Payroll, which has not been very accurate so far, but we'll see whether or not the market actually looks at that. So the reason why we want to know how high we're going to go is because we have now pushed off our 200 weekly moving average, and we haven't really looked back. We don't quite have the volume yet, but for the bulls who had the patience to pay themselves to wait and enjoy a nice big beautiful gain, it's been quite the day. So we're not going to take anything away from the bulls. Even if we are in a bear market, this has been a beautiful rally so far. And there's a very easy chart for us to look at to understand the story here. So we're going to hide everything, and we're just going to look here and note that, we closed below the 200 weekly moving average last week, and now we're powering up massively. Yesterday, we were battling at the open today. So if we look at the opening price today, and the opening price today is 372.4, there is a tail formed here on the daily chart. That's just from dark pool prints. We didn't actually push all the way down there. They used dark pool prints to fill that order. Fill that gap. But anyways, we open at 372.4, and that is so important because it's last week's high. So we opened on last week's high and then just pushed up. That's the red line for me, which means that's the resistance. So we're definitely still funneling lower by looking at our red lines in a bearish pattern, in a bear market, because we need to get back above 384 to reclaim bear market territory. But it's looking more constructive than it did even yesterday. So now let's try to look at one more chart to see if we can really understand where the next resistance is. Because if SPY just cleared last week's high and then just powered up massively, what do the Qs look like here? And the Qs tell us that last week's high is 281.25, which is where we spent a large part of the day just kind of hovering. And by the close, we're now above it by about $1. And if we can hold that area for tomorrow, how high can we go? We could go back up to the next low in the real body at about 285 for QQQ, or about 1 more percent. And if you look here at the S&P, in terms of where we could go, I'm watching the next low here, 382. And there's actually even some option clues for us there. Whoa, cool, interesting. We could go pretty high. I want to show you one more chart here just because we noted that we are starting not just a new week, but we're starting a new month, and we're also starting a new quarter. So we're up by 5.8% in the quarter so far. Sorry, in the month and in the quarter. Wow. That's like really impressive. Yeah, that's like really impressive. So when we look here at the monthly chart, we note that we've already gone through 2 of the lows, and now we're digesting the real bodies, and our next low here at about 380.54. That's like about 1 more percent from here. And then if we look at a 3-month chart, here's where it can start to get a little bit easier to spot the resistance on how high we can go. If we look back here to, I'm just going to delete these lines. Let's go back to our high over here, which pretty much forms our head and shoulders. What do we know? Well, we got a really key area. It's right here at 378.46. That's going to be the high from October. If we look to where we are now, 378. So if we can clear 378 and QQQ can hold its 281.25 high from last week, it looks like if we can break through here, which is where the real bodies are, we can start sucking up on this quarterly chart to, I don't know, maybe even 400. I think that's going to be, it's going to come later. We still have a lot of resistance to get through. One more thing I want to show, just to show how similar these moves are from before as well. So if we look here at our daily chart and we look at the last time that we formed a base and then pushed off, which is what I was trying to explain for the last little bit, talked about this in detail on the Friday stream. And what happened? In 2 days, we are gone. So in 2 days, we did what it took us 4 sessions to do last time. If you look at the percent gains from the low to the high, we rallied up by about, 5.8%. And the easiest way for us to look at where we are in the last 2 days is by just looking at a high time frame chart, 5.82. So there is some math at play here. The pattern looks similar. This is definitely relief. We'll see if it turns into more. That's why it's called the wall of worry, because as we keep going higher and higher, people keep worrying and worrying. So how high can we go? I think I've laid out very clear levels of resistance. And now I'm going to talk a little bit more about what actually happened today. There's one more level I want to talk about, which if you're wondering what you're missing by only watching the YouTube videos, every morning pre-market, I go and provide my notes. These were provided pre-market today. I share my notes on SPY, QQQ, and ES. And here I talk about how 372.3 is last week's high, taken out in pre-market. We're set to open right on the daily downtrend with a large gap. 373.4 fills September 22 gap. And after we got through there, I walked through on our stream. We note we were opening up right at the resistance area here, right in the gap. And then I pointed out these two areas here. So in addition to the areas that we just talked about, if we know that 281.25 on QQQ is where we want support, here's what we want to look for SPY. We're looking for September 21 and 22 close and open, and that is found at 377.39 and 376.59. So that's where the S&P spent a large part of its day just bouncing around back and forth. And that goes back to these days right here. So if we now understand the significance of roughly 378.5, let's look at the high from this candle then, if that's what we're really battling for. So if we can clear the high here at 378.3, that's like the exact same number. It's mid 378s. You got it. One more chart. We got here 378.4. Right, so 378.46. That is going to be our 2020 high. So if we can get back above 380, it means we're clearing significant resistance on the daily, on the weekly, on the monthly, but also even on the quarterly. And it's only been 2 days. Oh my goodness, these bulls. And when we look here to our heat map, there's breadth, there's depth, but I want to focus on one company specifically. That is Tesla. And the reason why is because it looks like Elon's actually going to go through with buying out Twitter at $54 a share. Twitter, I think, was up 20+% today. I'm not sure where we find it on the heat map here because it's a tiny little block. It should be bright green, though. Anyway, so Twitter's up 20%. Looks like the deal's going to close. I think Elon knows that there's no real breach of agreement, so he's going to have to be stuck buying it. But the reaction is what I actually want to look at. So we got really bad delivery numbers yesterday, again, arguably because the reaction was negative. And now if we look at the Tesla chart, what we want to ask ourselves is this stock looking like it's bottoming on bad news? Well, if the broader market is bottoming on bad news, and Tesla was a drag yesterday until it wasn't, is it looking bullish today? Well, it's up by 2.9%. It's worth $800 billion. And when we compare it to the other trillion-dollar companies here, it's doing better than Meta by 2x, basically doing as good as Google. And Microsoft pretty much there, better than Apple. So looks fine. Looks like it's doing okay on bad news. BTC back above 20K, breaching its 50 daily moving average. Hey, this is starting to look constructive. Is it bullish yet? Constructive looks good. We haven't been able to say that for a while for these bulls. So let's take what we got. We can also note that we are red on DXYs on the dollar. So we're actually coming down. And I'm going to talk about the reason why I think this happened in a moment. Then we're going to look at VIX also coming down back below 30. So that's a significant area here once we lose 30. Now we're going to look at the 2-year note. It is putting in a hammer. So the bond market's not convinced. And this has generally been leading us. So same thing here with the 10-year. We got lower tails. People are buying the dip up. So is this a trap? We'll find out. And again, I'll tell you the reason why that might be here coming up in a moment. Looking forward to, so we looked at the heat map, pretty bright green everywhere. Then we look at the key dates. Okay. So a Friday or payroll Friday is the big one. What do we got tomorrow? Well, we got a preview with ADP Non-Farm Payroll. I'm going to spend one moment looking at this here just to explain myself really fast. And then we're going to move on to the next thing and wrap the video up. So for tomorrow, let's look at what we're expecting. So for ADP Non-Farm Payroll, we're expecting 200,000 jobs added. And the previous number was 132. So this number here looks pretty weird when we look at what we're expecting for the number coming up on Friday. So if we look at the number we're expecting coming up here on Friday from ADP Non-Farm Payroll, just moving forward here all the way to the end, we're looking for 250, and previously at 315. That would be a tick down, just like we saw for jobs openings today. We also saw that the fear and greed index ticked up here to 30. and that Ray Dalio was saying the short-term interest rate is now about right. So with that said, if you want to watch more, I encourage you to tune into my weekend deep dive where I go over all my notes, show you how I got prepared for the week and where I think we could go from here. If not, thanks so much for watching, and I look forward to seeing you tomorrow. Thank you.